All right. Hi, everyone. My name is Marcus. I'm from Societe Generale. We are a French bank, and we're known to be famous for our structured products. So 5 years ago, here on SGX, we decided, okay, we're going to launch a structured product on SGX and list it on SGX. Right? This comes in the form of the daily leverage certificates, DLCs. So some of you might think, why is it a warrant or is it not, or is it an option? So it's not like a warrant or not an option. There is no in the money, out of the money, at the money, or time decay, the kind of optionality impact. So for investors, it's a much simpler instrument. Okay, if I can just sum it up in short, it is more like a leverage and inverse ETF rather than an option type product like warrants and options. All right. So every day you get that 2 times, 3 times, 5 times, or 7 times leverage. So some of you, I believe, might have heard of your TQQW or SQQW. These are your ProShares Ultra 3 times long and short Nasdaq that is very, very popular on the US market. So these DLCs are exactly the same payoff as that TQQQ and SQQQ, just that it is in a certificate structure listed on SGX and not an ETF structure like those TQQQ or SQQQ. All right, so today in a very short session, I will just give a quick introduction about the DLCs and as well as to share with you about our latest launch, the US Index DLCs. You can gain exposure to the S&P 500, Nasdaq 100, and as well as the Dow Jones Index here on SGX. All right. So 5 years ago, we listed these DLCs on SGX. All right. And, these DLCs are a short-term trading instrument that gives you exposure, leverage exposure, but for long and short direction as well. So you can trade a bullish market, but you can also trade a bearish market. All right. So with what Kelwin has mentioned, it looks to me like, there's a lot of headwinds in the market. But surprisingly, everyone is also very positive, very bullish because they think that the Fed is almost done hiking rates. So when you have this kind of convergence of positive sentiment and some negative sort of looming sort of headwinds, what you will get, I believe, is increased volatility. All right, in this kind of increased heightened volatility kind of environment, it pays to have a long-short instrument, a tactical instrument that you can use to trade both sides of the market. All right, so, in that sense, if you're a more active investor, you want to take a more active approach to your investment, I think the DLCs is something that you can consider for your investment. Sure, you can have your whole big bag of Tesla, Tencent, DBS stocks as an investment portfolio that you will hold till you retire. That is perfectly fine. All right, so but when there's some of times like this where it's not one straight line up in the market or, a very volatile market, that 10% or 20% of the portfolio can be used, that funds can be used in a more tactical instrument like the daily leverage certificates. All right. So the DLC's short-term trading instrument, I have to emphasize, it's not a buy and hold instrument. All right. It's people trade it for, intraday, for a few days or for a few weeks, but definitely do not hold this for months at end. All right. It's a short-term trading instrument. And there's a daily long and daily short. So if you're bullish on the underlying stock, you buy the long DLC. But if you're bearish on the underlying stock and you want to profit from it, you buy the short DLC. All right, so we have different leverage factors on this, 2 times, 5 times, and 7 times. We hope to go higher. I mean, I can definitely do 3 times. If you want to hear 3 times more, if you want 3 times DLCs, please let me know. We can issue them as well. And it's linked to an underlying asset. So we do have the Singapore, Hong Kong market exposure. We have DLCs on your DBS stock, your STI. We have DLCs on your Tencent, Alibaba stock listed on the Hong Kong exchange, and as well as the Hang Seng Index, and the newest one, the US indices. So some people might say Singapore market SGX is quite boring. DBS only moves less than 1% a day. To be frank, yes, that's quite sad. But with the DLCs, with that 5 times leverage factor, these DLCs, you can get a bit more excitement in that sense. If DBS moves by 1%, then your DLC will move by 5%. So 5% is decent, in my opinion. So I think that's great. And also, you can use it for long-short instrument. So I think that's where the beauty of DLCs is. Especially sometimes it's not easy to trade the Hong Kong exchange. The fees are quite high, your Tencent or Alibaba. So these DLCs also do offer that, cheaper transaction fees as well as, a smaller ticket size that you can gain exposure to Hong Kong stocks. Okay, it's traded on SGX. So like the beauty of it is also you can gain exposure to Hong Kong, US from the comfort of here on SGX. Okay, you access these DLCs the same way that you would trade your DBS stock or your OCBC stock, for example. You go into your broker platform, you look up the counter code of these DLCs and you're able to retrieve them and trade them as though it's like trading a shares. But you have to be SIP qualified for this to trade the DLCs. All right. So for us, Societe Generale, we are the product issuer as well as the designated market maker. which means that we are obligated by the exchange to be there to provide liquidity throughout the trading day for investors to buy and sell these DLCs, so you don't worry about not being able to enter or exit their positions, because we are there throughout the trading hours, 9 a.m. to 5 p.m. To market make on these DLCs. All right. So we started off 5 years ago on SGX, and it's been a long journey. We've expanded from just 10 DLCs 5 years ago to now over 300 DLCs listed on SGX. All right, we've expanded from Singapore to Hong Kong and now to US market last year. We launched the DLCs on the S&P 500, Nasdaq, and the Dow Jones Index. All right, so we have both index and single stocks. The big names, Tencent, Alibaba, you name it, we have it over there. We even have some of the smaller ones like Geely Auto, Kuaishou. These are quite popular ones. But we also have Singapore stocks. Not that much to choose from, to be frank. But we are trying to expand the shelf on the Singapore side as well. Maybe even have a REITs index DLC so that people can go short on it, maybe. All right. I know REITs, it's been a long time favorite, but it seems like the tides are turning. So I'll definitely be looking into REITs as well. That's a Singapore favorite. So you can get leverage on REITs. That's quite interesting, right? So we're looking into that very closely. All right. And then the US index DLCs is something that we launched last year. 5 times and 7 times leverage on this US index DLC. So some of you might think, if this DLCs trade on SGX during Asian hours, then how? But US market is closed, then how? How does it move? All right, so the answer to that is that it tracks, or it is very closely related to the E-mini futures on the CME side. So that trades during the Asian hours. So the DLCs will track the E-mini futures during Asian hours, and then during US hours, you'll continue to track the cash index. All right. So on a close-to-close basis, you get 5 times or 7 times leverage on the cash index movement. All right. So the E-mini futures, some of you who are more sophisticated, you can go to the E-mini futures directly, sure. But sometimes futures do have its own risk as well. And so it's a big ticket item. You might need to have a bigger contract size. But for these DLCs, you can even trade it for as little as $100 or $200. All right. So I'll touch more on this US index DLC, but this is something that is the latest, out fresh from the oven. The US index DLC, some people want to trade the US indices during Asian hours. Nowadays, with kind of volatility, I look at the market, sometimes even before 4 p.m. Singapore time, Nasdaq already down 1%. Nasdaq already up 1%. That's quite a lot, right? So I think you want to get in ahead of the US market, or you want to hedge your positions during the US Asian hours. Sometimes now US-China relationships, they are quite tense. Sometimes there could be a high impact news during Asian hours. You can use these DLCs to gain exposure to the US market, especially if you're holding a big bag of US stocks as your portfolio, long-term buy and hold, and then suddenly you see that, there's an upcoming US-China conference, whatever, some high impact news during Asian hours. You can use the short DLCs as well to hedge your investment portfolio, which I'll touch on later as well. How do you actually trade the DLCs? All right. So over here, you can use this, and it's traded in SGD as well. So for those who are, comfortable with the SGX market, you don't want to, go into the US market or the Hong Kong market, you're not so sure about what their fees are like or their market structure is like, then you have the comfort of you getting exposure to this US market and Hong Kong market using the DLCs listed on SGX, where you're more comfortable with, especially in SGD. All right. Now US dollar also is quite volatile. For me, I hold a big bit of USD and it's been suffering. Especially if you're doing a short-term trade, you don't want to be able to have to change to USD and have to change back later on. It's too mafan. All right. So sometimes you want an SGD denominated instrument to gain exposure to the US market. All right. We also launched the STI one last year. So we are the only instrument that has such long short and up to 7 times leverage on the STI. So this is something that is quite interesting. It's our local benchmark for CSTI. So we want to support local. We really want to profile the STI by having such instruments on it. STI, like you said, it's quite a boring index, doesn't move more than 1% a day. How to trade it? Well, with these DLCs, you can get up to 5 times or 7 times that daily performance of the STI. Okay, so these are the STI ones. So a bit of basics of the DLCs for those who are new. So I mentioned there's like a leverage and inverse ETF, right? So this is how it works is very simple. On a close-to-close basis, the DBS, so for example, DBS moves up by 2% from $30 to $30.60. Well, the DBS long DLC will move up by 2% times 5, that's 10%. All right, the DLC value will move up by 10%, while the short DBS long DLC, 5 times long DLC will fall in value by 10%. And vice versa, if DBS instead falls by 2% on a close-to-close basis, this DLC, the long DLC will drop by 10%, while the short DLC would rise by 10%. All right, so this happens every day on a close-to-close basis. Similar to your leverage and inverse ETFs, your TQQQ or SQQQ is the same concept. Okay, so that's why we wanted to launch the DLCs on SGX, because we feel that it's a simpler to understand instrument if you want to gain leverage. All the option type products where you have to take into account implied volatility, you have to take into account which strike price to choose, add the money in, the money out of the money. Options is quite complicated for people to understand. And we think that this kind of more linear leverage instrument, long short, can serve the same purpose, but easier for people to understand. Okay? So this is the DLCs. The DLCs are all priced between 20 cents to about $2 level. All right? So you can see over here, this is the DAVW. This is a Meituan 5 times long DLC. All right, so if Meituan is up by 8% that day, okay, Hong Kong market is really volatile, just to mention that it's not for the faint-hearted, especially with the DLCs. You can see over here, Meituan is up by 8%, down by 5%, so the DLC is up by close to 40% on that day. All right, so 40% is quite a big one, quite a large percentage gain for an intraday trader. So like I said, it is for short-term trading, and it's please exercise your own risk management, position sizing. These are leverage instruments, so please be careful. Make sure you know you are trading, and I hope that we can help you to understand the product first before you start trading leverage instruments as well. All right, so that's how it works. Every day you get that 5 times performance. All right, 8%, 40%. Similarly, on the short DLC, 8%. This short DLC is down by 40%. All right, so long short, that's how it works every day. This DLC, which is priced there. So another benefit also is priced at 30 cents, etc. And its minimum bot lot size is 100 bot lot units, which means that you can technically gain access to this, buy this for like $30 if you want. But of course, you take into account your broker commissions, etc. You don't want to just pay like $10 over a broker commission for a $30 trade. All right, but this allows you to scale in to your position and do it in tranches. I know I buy BYD stock now in Hong Kong Exchange. I need 20K Sing dollars and minimum exposure, one shot. I'm not sure about you guys, high net worth individuals here, but for me, 20K into one stock is in one tranche is quite a lot and quite high risk. So you can use the DLCs to do it in multiple tranches or even do a lower position size. All right. So how do you trade the DLC? So you can do it at day trading, swing trading, or even using for some form of hedging purposes. All right. So this is an example of our 7 times long STI, CWHW, the stock code. All right. So it rose from 90 cents to 97 cents. So that's a 7% gain intraday. All right. So this is a day trading example where, if it's a higher than usual volatile day for the STI where you move 1%, this 7 times long DLC would rise in value, and then you can enter a position at around 9:30 a.m. and then exit at about 1 p.m. All right. And that is a 7% gain on the STI. All right. So that is something that is more efficient. If you are a very intraday trader kind of thing or a more active trader, definitely you'll be worth using the DLCs as opposed to maybe using the STI ETF, for example. You will pay less commissions and it's more effective to gain that gain intraday. All right. On swing trading, if you want to hold your positions for a few days, you can also do that. So this STI long DLC, CWHW, rose from 92 cents to $1.15, up 25% gain on the STI. If you hold the STI for like 10 years, you think you only gain like 5% or 10%, I don't know. Excluding dividends. Okay, that's a separate story. All right, so this is a 9 trading days trade, swing trade on the DLC. You can gain 25% because the STI rose about 3% over there. And it's a 7 times long STI. All right, so that is a swing trade example. All right, and then lastly, on the hedging, using the short DLCs for hedging purposes. If you really are holding a big bit of bank stocks, your DBS, OCBC, etc., they have a large component in the STI, you want to hold it for long term, but you see an impending correction, banking crisis that Kelvin pointed out is worsening, and you want to hedge yourself, you think there may be a correction on the bank stocks, you could possibly use the STI or even the individual bank DLCs to hedge against that exposure. So you can see the STI short DLC, CZGW, the stock code, rose from 64 cents to 85 cents, a 33% gain within these 7 trading days over here. All right. So this one, you can use it to play the other side of the market to profit when the market corrects. All right. So I'm not saying that, for those who are not aggressive, who are not a very active trader, fine. If that's your investment style, that's your investment style. But it always pays to have some form of tactical instrument on hand, just to understand when the market actually goes into certain phases where it's more volatile. It really pays to have a tactical instrument like that. But of course, For such, playing with leverage and a long-short direction requires that you need to really understand the product, understand your risks, manage your positions well before you embark on an active approach to your investment. Okay? Another example, I want to go into the US index DLCs to explain how it works. All right, so you see over here, you can trade it intraday during Asian hours where it tracks the E-mini futures. So even the E-mini futures can be quite relatively volatile during the Asian hours. So if I enter the DLC at 168 at 9:30 a.m. Singapore time, the Nasdaq rose by 1%, gained by 1% from 9:30 a.m. to about 3 p.m. in the afternoon. That's about 1% gain. On the 7 times long DLC TQQW, anyone notice that it looks like the TQQQ on the US, the ProShares Ultra? So thank you to SGX for customizing some of the stock codes for us. This looks like the TQQQ, the same as the ProShares Ultra Nasdaq 3 times long and short, 3 times long ETF in the US. So the stock code for this DLC is TQQW. It rose from 168 to 180, a plus 7% gain from 9:30 to 3 p.m. So not bad for an intraday sort of trade. So some people do use this for intraday trading. But if you are comfortable with holding your positions overnight and not being able to trade the DLC during US market hours, because the DLCs, US index DLCs are only traded during SGX hours, 9 to 5 p.m. But some people, they can't be bothered, I'm not going to wake up at like 11 a.m. or 12 a.m. to look at the market. My bedtime is at 10 p.m. So they are willing to hold the position for a few days, for a few weeks. Then it's possible that, these US index DLCs could be useful for them. If they're comfortable with holding for a few days, you can see over here, over the period from 13 to 17 March, 4 trading days. All right, the 7 times long TQQW rose from $1.68 to $2.31, a plus 38% gain, when the Nasdaq fell by 4% during this period. All right, you will notice that 4% times by 7 is 28%. 28%, right? But why is it at a 38% gain here? Where did the extra 10% come from? This is not a trick. This is the compounding effect of the DLCs, which can work for you very well in a strong trending market, but might not work for you so well in a volatile market, which I will explain a bit later on. All right. So that is one of the beauty of leverage and inverse products like this, where you can gain more than the leverage factor in a strong trending market. Okay. So this is an example of a swing trade on the TQQW, but please take note, you cannot manage your positions during the US market hours because this is only traded during Asian hours. But if you are willing to hold it for 1 or 2 weeks, and you want to see how it goes, you can, and you're not going to wake up at night to, manage your positions, you treasure your sleep very much, then this instrument can serve you quite well. Okay, so this is a hedging example on the US index. Similarly, you can use a short Nasdaq, I'm using an S&P 500 for this. You can use a short S&P 500 DLC to hedge your position. All right, so you can see the S&P 500 short 7 times, DLC CXIW stock code, rose from 45 cents to 65 cents, a plus 44% gain in December last year, 13 to 20 December, when the underlying index, S&P 500 index, fell by 5% between these 6 trading days. All right, and then you can 6% times by 5% times by 5 is 25% again, but this is 44%. That's where the compounding effect again benefits you. All right, so this is an example of a hedging strategy. If you're holding a big bet of US stocks, you want to hedge against it, then you can use this S&P 500 short DLC as well. All right, we do see increasing demand for people, although I'm a bit worried because everyone is piling into the short Nasdaq and short S&P 500 index. It's totally one-sided. Everyone keeps piling money into the short DLCs for the US index. So hopefully, people can be more bullish, and then you can start to also look at the long DLCs as well, as well as the long STI. Everyone's piling into short DLCs. So I think that's what it's been like the last few months, but hopefully that will change soon in the market for this year. I think everyone is trying to be more optimistic about the market. I also have very high hopes for the Hong Kong market. After the China reopening last year in November, our Hong Kong DLCs actually saw a significant jump in the trading volumes. So people are really hopeful that the China reopening and the China story was kickstart again. Although there's been quite a big pullback on the Hong Kong stocks from the whole geopolitical crisis, the whole banking and the whole US sort of influence. But hopefully it will still be in a bull run that started in November when it reopened. But do watch out for the Hong Kong market space as well. And I think it's very efficient to use the DLCs to trade the Hong Kong stocks as well. if you are a more short-term trader. If you are a buy and hold, you want to hold the Tencent stock or Alibaba stock forever, then please go and buy the stock instead. The DLCs are more for short-term trading. All right. Okay, the compounding effect is something that is very important. Just now you saw, the S&P is up by 5%, so times by 5 is 25%. But why did the 7 times long actually have more than that? Where did the extra kicker come from? That is the compounding effect. If you trade the TQQQ or the SQQQ in the US, or the SPXU or the UDAO or SDOW, those pro-stressed ultra 3 times long and short US indices ETF in the US, it's exactly the same payoff. That's where the compounding comes from. Every day your gains and losses are locked in. So for this DLC, it works the best in a strong trending market. But if it's in a sideways market, it may not work so well for you. So this is a very important feature of the DLCs you have to understand. In this table here on the left, you can see, for example, on day 1, the underlying is up by 1%, day 2 is up by 2%, day 3 is up by another 2%. In total, it's up by 5%. All right? Every day, you get that 5 times performance, right? The 5 times DLC, you get 5 times performance on a close-to-close basis. 1%, 5%, 2%, 10%, 2%, 10%. That's how the DLCs work. But overall, you'll gain 27%. So 5% times 5 is 25%. So there's extra 2% there. That's because every day your gains and losses are locked in. Your gains are locked in over here, and therefore the next day, the 10% is off a higher base. Gains are locked in here. That's why 10% is based off a higher base. Therefore, at the end of 3 days, you get more than that 5 times leverage. So that's perfectly fine. And people who are sure about the trend or confident about the trend, they know how to use the DLCs to maximize their gains. All right? But in a sideways market like the table on the right here, day 1 up by 2%, day 2 down by 4%, day 3 up by 7.3%. At the end, still up by 5% in total, the DLC. The underlying. And every day, the DLC gives you that 2% times 5, 10%, minus 4 times 5, minus 20%, 7.3 times 5, 37%. By the end of the third day, it's only up by 20%, not up by 25%. That's because your losses on your second day, where it fell by 20%, is locked in as well. Okay, so the DLCs have this compounding effect feature, which is very important, and it's similar to your leverage and inverse ETFs in the US. So you have to be aware of it, and it's a very important feature when you trade this kind of leverage and inverse instruments. Okay? All right, compounding effect, like I said, it can work for you 5%, but times 5, times 7 times leverage is 35%, but you have 39% performance here on the 7 times long Nasdaq, and also less than that 28% that you're supposed to have over here because of the compounding effect when you hold it long term. So DLCs is another reason why the compounding effect, another reason why you should not be holding the DLCs for long term, it should be a short term trading instrument, is because of the compounding effect. Okay? Right. Right, the last part I will conclude. So this instrument, there are many leverage instruments out there. So this DLCs is one of them. It's listed on SGX. You can trade it like through your regular stock brokerage account. All right, some of you have asked what's the difference between this and CFD. CFD is over the counter, it's outside of SGX, and it's a margin product. Okay, margin product is have a different set of risks. So the DLCs are not margin product. If I put in $1,000, the most I can lose is that $1,000, even if the underlying moves adversely against me. But for CFDs, there is margin, and it's a possibility of having a margin call if the underlying goes adversely against you. You put in $1,000, if the underlying goes adversely against you, you could be asked to top up your margin and put in more money in order to hold your position. All right, so that's margin products. Margin products is a different set of risks from a securitized product like the DLCs. Okay, and compared to like others like warrants or options, this is not an option type product. So don't worry about implied volatility, don't worry about time decay. This is just the 5 times leverage. You get it on a close-to-close basis, and you have to pay the overnight funding costs, but it's not a time decay or optionality impact either, not affected by implied volatility, to say. Okay? All right, so I'll end here. We have a website, dlc.socgen.com. All right, you can visit our website where you can see the full list of DLCs available. We have over 300 DLCs listed on SGX. And I think you can find out more educational information as well under the education tab to learn more about the DLCs. And if you have any questions at all, any feedback, etc., we have a hotline where you can reach myself and my team, 6226-2828. Reach out to us for any questions. Even if you want to call us and say, let's have a chat, how does DLC work? We're more than happy to give you a one-on-one tuition on the DLCs, all right? So please reach out to us over our hotline and visit our website, dlc.socgen.com. Okay, I think I'll stop here.
All right, before you go, there's a bunch of questions out there, so I'm going to get a microphone for Kelwin as well. All right, so let's take a look at some of the questions up there. Right, Kelwin, which is the first one you want to deal with?
Okay, let's go by the votes. All right, I'm going to try my best to kind of skim through it as much. I do understand for the interest of time. All right, what's the best asset to invest in the current interest environment? Traditionally, when interest rate is high, all right, people usually look at the bank. All right, so banking stock actually, as you can see, tends to perform better. So for our local banks, all right, you can see actually it's been actually trending up, all right, due to the net interest margin that it's making. All right, I cannot say for all the other banks. All right, so you do have to look thoroughly the fundamentals. All right, you don't want to have another SVB kind of thing or Credit Suisse. There are a lot of red flags around. Okay, we have to do our homework. But generally, our three local banks, I'll be on the safer side. All right. Okay, what's the best asset to invest in the current? Okay, I did that. To your earlier statement, why is there a bullish period for equities in April? Firstly, also the psychological. All right, as you heard, right, sell and go away in May. All right, people tend to sell in that aspect. So that's a kind of psychological thing. So you spread to everyone, everybody tend to like a herd mentality, you go on to that. All right. Reason why, some reason, because April also, firstly, fund managers have to reset their stock take, all right, for the next quarter. So to look better, they kind of dump like the weaker stock, go for the higher yielding stock. All right, at the same time, also there's US tax refund. Right, so the citizens do get their refunds, and they technically also might pump into the stock market, and that's why April, January might have this effect. Right, so as I say now, some people also looking forward to April. Right, then if it goes bullish, you see it's a self-fulfilling prophecy. All right, okay. The effect of Singapore property market is booming over here. Like I said, I can't really answer property-related questions. I'm not in the capacity to. All right, so. Yeah, are we going to finally be tame? I can't really answer that. All right, with Fed rate cuts. Right, where's that? With Fed rate cuts, where depression, deflation take place and affect SGX market. How can we avoid or stay? I think we really need to ask ourselves whether are we a trader? Are we a long-term investor? All right, as we can see, I did give some stats on the long-term effect on S&P. On the long run, it always kind of goes up. All right, take this maybe 1 year or so when it comes down to start positioning yourself. How long will this recession? We're not technically in a recession yet also. B, nobody really knows. We have a lot of economists always at head trying to debate. Okay, so nobody really knows. Okay, some people can say this, some people can say that, so it doesn't really account for much. So dollar cost average is one of the main strategy if you're an investor, right? For if you're a trader, like I said, there are instruments that you can actually be using to take advantage of this volatility.
Yeah, so I think on terms of the best asset, I think one point that I've had this feeling before. This term, I think, it resonates with me to a certain extent. TINA, I know don't know if there's any TINA over here, but TINA, there is no alternative. So that is something that I think I've learned off recently as well, and I also felt it. Whatever asset class that you're looking at, it doesn't look very promising. You'll be hit by everything, especially in a high inflation, high interest rate environment. Even worse, if you go into a stagflation environment, there is no alternative. And what do you do in that case? That's why I think that as part of your investment portfolio, for this kind of TINA scenario, there is no alternative scenario. There is only one alternative. You need to have a long short tactical instrument. All right. So you have know how to play also the downside, but of course this is for the sophisticated investors. All right. Having a short instrument can really help you out in a TINA environment. All right. So it's something that resonated with me recently, and just to share with you guys. All right. But I'm not saying that it's a TINA environment right now. Okay. So please look out for all the different kind of asset classes. May I go on to like some of the DLC very quickly? Yeah. So I think what's the most popular leverage factor for DLC? I think it's important to note we have quite a lot of leverage factor. But take note that for Hong Kong stocks, it could be paid to not to go up to too high a leverage, maybe 5 times or maybe even lower leverage might be better. For Singapore stocks and Singapore in underlyings, it pays maybe to go higher leverage because of the volatility. Hong Kong market has been increased volatility over the years. I mean, over the last 1 year, the increase in volatility in the Hong Kong stock market has been increasing. So I think the optimal sort of maybe leverage factor could be lower than compared to a Singapore one, and the US one could also be a lower level as well. All right.
Okay, and how should we position ourselves to the market uncertainties? I think also like it really boils down to whether you're long term investor or are you a short-term trader, all right? So short-term traders, you are looking out for the kind of spike. So look at your charts. Those are one of the most telling signs to look for it. But how you should really position it, if it's also recession-wise, consumer staples are always one of the key to look at. Whenever it's still a recession, you still need to go, you still eat, right? You still maybe go to McDonald's, you still drink your Coke, you still drink your Pepsis, all right? You still have to shower, all right? You have to use your shampoo, your L'Oreal and everything. All these kind of things, your normal consumer daily staples, you'll still continue to use it. Luxury goods-wise, unless you're a different class, all right, you get affected, all right? Most might not go for such things already, okay?
Last question, I think we have time.
Okay, how high and long will Fed interest rate stay? All right, from what Powell said, for this year, probably we're still seeing no rate cut yet, all right?
Last question, I think I love that question a lot. Like, why does a DLC trader need to be SIP qualified? You know, since DLC does not lose 100%, there's a punching bag buffer. That's a perfect, very, very good question. Whoever wrote it, please go right to ST, Straight Science Forum. Why do we need to have this SIP? Then maybe MES can see. But unfortunately, this SIP regime is the MES thing. I think leverage as well as the structured product makes it a bit more complex. So I think that they require investors to understand a bit more about the product before they can trade it, which is fair. Unfortunately, that is where it is. But if anyone has any trouble being SIP qualified, you need some tuition, like I said, do call our DLC hotline, 6226-2828, and we'll be happy to guide you guys. All right. Okay, I think that's all we have.
Thank you very much, Kelwin and Marcus.
Thank you.